Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's get a quick check on the last week. Global cues, rupee depreciation weighed in and led to a day of range-bound trade. So the Nifty ended about 0.5% in the red, reaching the 11,400 mark. Sensex tanked more than 150 points. Bank Nifty performed. That index shared more than 200 points by the end of the day. Mid-caps end 2.54% in the red. Anuj Singhal is here with the highlight of today's trading action. Anuj, looks like it was a day of consolidation for the bulls.
Well, very volatile day today. The market essentially declined because there are fresh emerging market concerns. Emerging markets beginning to underperform the developed markets today. Nikkei was up, Europe was up, but emerging markets were down. And we, of course, were reacting to 2 days of global cues. Rupee also made an all-time low versus the dollar. In the context, the market was quite okay. Large part of the market drag, especially on the bank Nifty, came from Kotak, which was down 4%, news-driven. HDFC was the other big drag on the market today, along with Larsen & Toubro and Reliance. Other Nifty losers today included names like Vedanta, Hindalco and Ultratech. On the gaining side, GAIL continues its march. Dr. Reddy's and Sun Pharma looked good, and Infosys made a fresh high in today's trade. In the mid-cap side, there were some gainers like HDIL, Vakrangi, Jet Airways, HCC, NBCC, then slightly better quality ones like Balkrishna, United Breweries as well. While there were some losers like Reliance Communications, Chain Irrigation, Shrey Infra, Piramal Enterprises and Jindal Steel and Power. All in all, I think the bulls would still be reasonably pleased with today's trade because the market may have defended the last low rather confidently. So let's see. As long as the mid caps are doing well, the bulls should be happy.
Okay, so perhaps just a day of hangover for the bulls after the midweek break that they got. But from the equity market to the currency market, the rupee continues to weaken versus the US dollar. The currency opened at a record low of 70.25 against the dollar and continued to weaken from that point to hit 70.32 as the demand for dollars strengthened. While emerging market currencies have been sharply hit due to the lira crisis in Turkey, in India, a 5-year high for the July trade deficit also hit sentiment. So far this month, the rupee has fallen 2.51% and remains the worst performing currency in Asia for the year. The former RBI Governor Raghuram Rajan has said he is not too concerned about the rupee hitting an all-time low. Speaking to CNBC, he said that the rupee needed a modest weakening because India's inflation is higher compared to inflation in many other key economies. Hear out the former RBI Governor and other experts on the rupee's free fall and its impact.
I think the rupee has been strengthening in real terms for quite some time. The inflation rate has been modest but slightly above world inflation rates. And as a result, the rupee needs a modest weakening over time. So I'm not too concerned about the rupee hitting an all-time low. It's more a factor of dollar strength rather than necessarily rupee weakness. But I would say that broadly, you want to look at countries with large current account deficits as well as a high level of debt.
Markets in general have been weak at a global level, and that's translated into Indian markets being weak and there being foreign outflows, both from equities and from bonds. And with the trade balance and the current account balance in deficit, if portfolio investment flows turn negative, well, the currency has to weaken. And the countries that have current account deficits struggling to get financing. The RBI focuses on trying to manage the volatility rather than the level. So I wouldn't expect RBI to try to hold any particular level. That's just not what they do or their style. But they will intervene persistently to try to keep volatility under control and manage the pace at which the currency moves.